Welcome to the CoinGecko podcast. I'm your host, Bobby Young. Each week, we will be interviewing someone from the blockchain industry to learn more about this fast-moving cryptocurrency economy. If this is your first time listening, then thanks for coming. The CoinGecko podcast is produced each week to help you stay ahead of the curve. Show notes can be found at podcast.coingecko.com. I highly encourage you to join our newsletter where we send out top news in the crypto industry every Monday to Friday. Come back often and feel free to add the podcast to your favorite RSS feed or iTunes. You can also follow us on Twitter and Telegram at CoinGecko. Hi everyone. Thank you very much for joining us on the second episode of the CoinGecko podcast. For today's episode, we have the honor of welcoming George Cao, the CEO of BitMax.io. Just to be clear, this is BitMax, MEX, not to be confused with BitMax, MEX, the cryptocurrency derivatives exchange. So a little bit of background. George Cao has over a decade executive experience in building and managing quantitative trading and venture capital platforms in global financial markets. He has an in-depth understanding and comprehension of product development strategy, research, and risk management in global capital markets. Cao graduated with a Bachelor of Computer Science in the University of Science and Technology of China, as well as earned his PhD degree in Computer Science from the University of Chicago. Welcome on the show, George.
Hey, thanks, Bobby. Thanks, everyone. I'm happy to be here.
So, Josh, I'm very happy to have you join us on the CoinGecko podcast. We have a lot of questions.
Likewise.
And one of the first questions that we want to get started is, we would like to know more about your personal story. How did you get involved in the blockchain and cryptocurrency industry? And following that, what made you start BitMax.io?
Yeah, I think this question are actually a combined question. It's a unique question. So I would take it as one question because I was not an early investor of crypto. I started notice crypto since 2007 together with the Bitcoin rally. So at that time, the Bitcoin price and volume are at the historical high. So as you know, I have been a trader for over a decade. So it's my trader's instinct that, hey, that's something I want to see if there's a trading opportunity over there. So starting from 2017, I actually start doing research on trading cryptocurrency, especially Bitcoin. However, during the process, I find it extremely difficult for me to extend my experience in traditional financial market trading experience into the crypto because one, the ecosystem has not been set up yet. And two, at that time, one, the commission fee is very high. Two, is the cryptocurrency exchange. The technology is not very good. I mean, even Coinbase, they have systems shut down multiple times back in 2017. So there is no way for me as a quant trader, especially a high-frequency quant trader, to start trading that industry because from both security and market structure, also from technology-wise, the risk is huge. As the research goes on, I ask myself, hey, if there's no better place for me to trade, why don't I just build my own exchange? So I start exploring the idea with my friend and also partner Ariel Ling, and also many other friends I know in the traditional financial industry. So every one of us think it's a great idea because every single pain point is a business opportunity. If I do this correct, if I do that correct, then we can build a very good exchange. It's better than any other exchange in the world. So that's why I came up with the idea of 2017. I want to build my own crypto exchange. And I assembled a team together and started working together in early 2018. And that's how BitMax come together.
It's very interesting. Actually, what you said goes very well with my next question because BitMax, I would say, received a lot of interest from the crypto community when you first launched in mid-2018 due to the strong caliber of your team. So you briefly mentioned a little bit about your partner. Perhaps, do you want to walk us through a little bit about some of the credentials of your team?
Yeah, definitely. I think we are actually the most experienced team in terms of financial in the crypto industry. So all 5 core team members, founding members of us combined have over 100 years working experience on Wall Street. So my partner Ariel Ling, who started her career from KPMG and Goldman, is a veteran in the industry. So he actually was COO at Barclays when I was at Barclays. We know each other for I think since 2010 when I was in London. When I joined Barclays London office, and actually Ariel was the CEO of multiple trading desks, including us. And then after Ariel quit while Chris, he actually had the broker-dealer department in Commerce Bank in New York City. And later he joined Deutsche Bank to run their liquidity product department. And I actually persuaded her and asked her to join us. And everyone around her is like, you're crazy. You quit your job in Deutsche Bank and join crypto industry. But I think it's a good move for her. So both of us think it's a very eye-opening, exotic / happy, and of course, very challenging experience, but in a good way. So that's me and my partner Ariel. And for the rest of the team, mostly our senior quant traders / quant developers from Wall Street. So our head of technology come from Morgan Stanley and AQR. Our senior dev come from Deutsche Bank, and similarly, our another senior dev, also the director of technology, Liu Han, come from BlackRock and AQR as well. As you can see, so all founding members of BitMax are coming from traditional Wall Street quant trading background. So we have extensive financial product design experience as well as managing experience. So that's pretty much about our team.
Yeah, very well said about all these things. The team is, as you said, like is what makes a project go well or go south. So it's very important to assemble the right team to start any project.
Definitely.
And you seem to have a lot of Wall Street credentials on the team.
Mm-hmm. Yeah.
So out of curiosity, is there a reason why you chose the name BitMax? It feels like many people in the crypto industry find this name appealing. So from my count, there are 3 exchanges with similar sounding name. So you guys, there's BitMax, MEX, the derivative exchange, and also Line Corporation, Line Corp's BitMax, which is a fiat cryptocurrency exchange in Japan. So yeah.
That's right. So, well, I have to confess that I'm not very good at giving names. So BitMax is my idea. Well, the meaning of BitMax is like our first slogan is maximize your potential. And also we want to maximize the profit of the price of Bitcoin. That's why the name came from. So to be very honest with you, we didn't actually, when we do a name check or do due diligence on other exchange, we never, the other exchange, BitMax, already, although they're big in the space, it never actually come on our radar. That's partly because of reason we were very new to the crypto space at the time we started BitMax exchange. The name itself does, it's actually commonly asked a question why we pick up the name. But I think in 2020 we will pick a better name and be part of our rebranding process. So I think as we grow, we definitely need a bigger and some name for us to better represent the genes of our company, of our team, and the position of us in the industry. So as our rebranding process.
Very interesting to hear that you guys are thinking about rebranding a new name for BitMax.io.
Yeah, it's actually been talked and planned for more than half a year, but our hands are always tied with all the projects. So I think eventually the time comes, we want to definitely rebrand it.
Yeah, I mean, a rebranding exercise is never an easy task to do. There's a lot of assets.
It's not.
Change.
It's not.
Comes with a lot of risk as well. And rebranding exercise can always go wrong. And if you don't do it correctly, so there's a lot of risk involved in doing a rebranding. So I understand why you guys decide to push this later, because there's obviously more important things to be focused on, like on products. And all.
Yep.
Talking about products, so what I remember that you guys were the first exchange to conduct stablecoin USDT, USDC trans-fee mining in late 2018. I'm curious, why do you guys decide to use trans-fee mining as a strategy in growing the exchange?
Well, transaction mining, I personally view it as a marketing tool. The reason being that is, one is the exchange space is already very crowded back in 2018. So we have Binance, we have Orbi, we have OKEX, we have Coinbase, we have Gemini, we have many other exchanges. And in 2018, so we saw the number of exchange at some point is exceeded 10,000 exchange. I mean, there are more exchange than project in the space. And for us, it's a brand new exchange. So how do we market ourselves? How do we differentiate ourselves with others? What is the marketing strategy that we use? It's very tough question for every one of us to answer. So by the time, I think it's better for us to introduce the transaction mining mechanism, because one is it actually attracts organic volume to the exchange. And two is it's definitely a very good marketing tool for us to attract interest and attract eyeballs from different industry players. And I think the strategy itself is very successful. We in several months, the traffic to us. I mean, in the very beginning, we only have maybe a few $1,000s of trading volume on a daily basis. But 3 months, 4 months after we set up, we see tens of millions of trading volumes every day. So I think the strategy itself as a bootstrap strategy, a cold start, is very successful. But however, the challenge is how do we convert a transaction mining exchange into a regular exchange? So nobody in this industry have did it successfully did it before. We are the first one actually to did a smooth conversion from a transaction mining exchange to a regular exchange. The reason behind that is a transaction mining exchange is there is a limit of development, meaning that to some extent the volume and user stops growth, and all of a sudden the traffic will drop a lot, and you see there is no organic volume, and also the token price, if there's any, will drop based on the mechanism the transaction money is using. But however, because our the careful design of our token mechanism, and also as long as we pretty much focus on organic volume in the later stage of our exchange, so we did success. We are the first one did a very successful conversion from a transaction mining exchange to a regular exchange. So when we look back, of course there are things we didn't do correctly, but mostly we're very happy with the strategy we're using. Yeah. I hope it answers your question.
Yeah. I think I remember at this point, I think Q3 2017, it was such a trend, and every single Asian exchange was doing transaction fee mining. It was a bit boring. They were doing it for some Bitcoin USDT pairs. I remember you guys were the first to do stablecoin Tether USDC, so that was interesting. But I think one of the things that about trans fee mining is that it's a bit controversial, I suppose. A lot of people, and as you mentioned, like not many people successfully transition to a regular fee exchange from trans fee mining.
Yeah. I mean, to us, we actually, I would say we use the hybrid model. So not every single trading pair on our exchange has the transaction mining features. We only select 2 to 3 different trading pairs. Basically, the stable coin, like you mentioned, and also the Bitcoin. The reason that we pick stable coin is that we want to minimize the market risk that miners are taking. Basically, if you're using mining with Bitcoin and USDT trading pairs, the miners have to take the risk of Bitcoin market price. However, if you're using stablecoin mining, you actually to minimize the market price risk of the underlying asset, the stable coins. That is the one features that we think we want to ultimately benefit our miners who work with us in the long run. So that's why we pick stable coins. And to be very clear, except for the 2 or 3 trading pairs, every single other trading pairs on BitMax was normal trading pairs, regular trading pairs. So I guess that's another reason why we successfully convert our exchange to a regular exchange after we stop transaction mining.
You have since announced that you have stopped all transaction fee mining in late 2019 after about 1 year of doing trans fee mining. I'm very glad that you guys have decided to stop it. As to be honest, I'm not a big fan of trans fee mining, as it unnecessarily inflates exchange volume. If I remember correctly, at one point back in 2018 and so on, and so you guys were topping the charts for all transaction fee volume, and it was mainly because of your Tether USDC pair, where it was easily racking over $1 billion in daily transaction volume. So, yeah, what was the reason why you guys stopped the trans fee mining program?
Well, so we actually designed it to stop it at some point. When we stop BitMax, there are 3 stages of development. The first stage, of course, is the transaction mining exchange. The second stage is stop mining and turn us into a regular exchange. And third stage is always on the regulatory side, if we want to open our US exchange and other more regulated countries and open to a more broader audience, I would say. So at that point, when we decide to stop transaction mining, from data-wise, we can see our user and our trading volume has stopped increase using the transaction mining mechanism, meaning that transaction mining has already reached its limit after 6 months after it started. That's one thing. 2 years, like you said, I appreciate your honest. because many people is not a big fan of transaction mining because they either have difficulty to understand where is the volume come from, or they probably think the volume is not organic volume. Therefore, it will hurt the trust between the users and the exchange. So we, at that point, we found it's very difficult. We have reached a certain stage that we have accumulated a relatively large user base, and it's about the time for us to onboarding more institutional traders. But however, during the onboarding process with institutional traders, we found it very challenging to explain them what is transaction mining. So when you talk to those very traditional, old-fashioned traders, they have no idea if they are new to crypto, even if somebody are already in crypto for quite some time, they still have either never heard of transaction mining, or like what you said, they're not big fan of transaction. So it's very challenging for us to explain to them this is not wash trading. All the volume is organic. So at that point, I think it's about time for us to stop transaction mining. Downside risk is not that big because only 2 or 3 trading pairs are in the transaction mining mode, and most of them are stablecoin trading pairs. So actually stop them doesn't have effect on the other part of organic volume of BitMax. And also stop that will make our job onboarding institutional investors, traders, and also to talk to new listing projects much easier. So based on all the reasons, we have decided to stop transaction mining. Although originally we planned to stop it by the end of 2019, but I think at that time, because the development of BitMax is faster than we thought, so we want to terminate the program earlier than we planned. So it turned out to be a pretty good decision because as soon as we stop transaction mining, there are so many institutions have been onboarding us. The trust going different, especially in CoinGecko, has been increased. So we are very happy with the result. So when people talking about BitMax right now, very few people still remember or will talk about, hey, BitMax is a transaction mining exchange. So they will view it as a regular exchange, which is a good thing for us.
Yeah, I definitely agree that the decision to stop transfer mining is the right one. I mean, the trend has died off, and I don't think anyone is doing anything about transfer mining anymore. So yeah, definitely a good choice to stop transaction fee mining.
Mm-hmm.
You mentioned in your previous answer just now that one of the next phases for BitMax is to get towards be a regulated exchange and to operate in the US. Maybe you want to expand a little bit on that.
Oh yeah, that's right. So BitMax was, our group holding company has different arms or different entities in different jurisdictions. BitMax currently is registered in Singapore and aim to serve global users trading between crypto and crypto. But however, due to the recent years, the regulatory side development is very fast in almost all major countries. So BitMax has already, in parallel, we have different entities in US and in Canada. So for example, we just got our Canada market MSB license approved earlier this year, and our US entity has already been set up earlier in 2019. So right now, it can only serve as OTC purpose for institutional and retail traders. But sometime in the future, it's always in our plan that we want to open up a US exchange and serve US investors. That's part of global expansion plan. It's not under the umbrella of BitMax. It's more like a parallel entity.
Yeah, I mean, if you look at the global exchange landscape, everyone's excluding the American users, and at some point they all set up an American entity and start serving the US users. I think Binance is like a very good example, and they started out Binance US, and I guess it's just going to be very competitive slugging it out in the US once you start launching it. So it's going to be soon, I suppose.
Yeah. It's really dependent on the resources we have because we are now pretty much focused on finalize our product line because we are a relatively new exchange, not like Binance and Huobi who've been resisting the industry for a long time. BitMax currently only still offers crypto to crypto trading with margin product and an OTC product as well. But however, we're missing the derivative market. So as soon as we will, I think in the early stage of 2020, the primary focus of us is want to finish our product line, meaning that we want to offer derivative trading to all our users. That's one thing. And two is we want to offer staking and also lending product to our users. It probably take 3 to 6 months to finalize all the product line, and then we can talking about expand to other jurisdictions. So because BitMax is still a small team, we have We have roughly 70 people globally compared with those big exchange who, for example, Huobi has 1,800 people. So we're still a very small team. So we have to prioritize things.
Exactly. Choosing what to focus on is usually is a very tough thing to do. So
Yeah, definitely.
So yeah, you mentioned a little bit about derivatives, which is exactly the question that I want to ask next, actually. So you
That's
guys
nice.
launched volatility cards. I had a look at your product specifications, and volatility cards look to me like a binary options product to me. Am I correct to say so? And also on your volatility cards, you call it turtle and bunny cards. That made me laugh a little bit, but it's also cute at the same time because it sort of makes it really easy for the average crypto trader to understand what those cards are doing. So perhaps maybe you want to tell us a little bit more about objective, the motive behind volatility cards and what can you do with it and the reason why you guys launch it.
Yes, so volatility card, I think it's different from binary option. So because binary option is still directional, meaning that you can either buy long or buy short, right? So if you buy long binary options, you make money when market goes up. If you buy short binary option, you make money when market goes down. But volatility card is different. So it's actually not trading on the direction of the market rather than the range of the market, meaning that if you buy less than 1% of total card, you make money if the market moves within 1%, either up or down. And if you buy a bunny card of 1%, then you make money if the market moves out of 1% market range, either go up more than 1% or goes down more than 1%. So I think it's similar to volatility option in the traditional market. We know in the traditional finance market, we have those volatility ETF and options on volatility ETF. I think that project was designed to using some of the merit in those financial products. So I actually came up with the name BonnieCon and Turtle Card by myself. The reason being that it's very very interesting because the bond is supposed to run faster than Turtle, right? So if you buy BonnieCon, if the market runs faster, then you make money. So if you buy Turtle Card, if the market stays relatively stable and slow, then you make money. So the reason I picked those names, I want to give people, the users, a very intuitive understanding of what the product is. So I think in the crypto industry, there's two ways of design product. One way is want to design extremely simple product because the users of crypto, the investor of crypto, many of them doesn't have extensive knowledge of the traditional financial background. So if you want to introduce a very exotic product, I mean, I would say very few people in crypto would buy and then trade it. So if we want to target a broad user base, we wanted the project to be as simple, as intuitive as possible. So the name Bonnie Card and Turtle Card pretty much explain itself so that people can easily play with it. I personally, during the test stage, I personally play with it for a bit. I think it's very addictive, to be honest with you. And also for another way to design product in the crypto space is to be extremely professional. For example, the futures market right now is pretty comprehensive. I would say the future product offered by different exchange platform is as good as those traditional futures exchange like CME and other things. We have very comprehensive liquidation strategy, very comprehensive margin call strategy, very good, very well designed. The fee structure is pretty good. I would say I was amazed by the speed that all major crypto exchange adopt the traditional financial market. It's pretty amazing.
Yeah, I definitely agree. And things are heating up extremely aggressively in the derivative space. We
Exactly.
in derivatives on CoinGecko and in 2019, and we saw like there were barely any exchanges doing derivatives at the start of the year. But towards the end of 2019, we had like 25 exchanges and more
exactly
was doing derivatives. So seeing a lot of interest in this space. So that was something very interesting. You guys are also recently launched your margin trading and other derivatives. I guess you guys have futures as well, I believe. Maybe you want a little bit more.
Yeah, sure.
The derivative product.
Sure. For the margin, I think we enabled margin trading in early 2019. It's been a while. Our margin product is actually our featured product, signature product. Because our margin is processor margin, which is different from almost all major exchange. So it's very easy to use. there is no borrow and return process. One click to buy, one click to return. And also another nice thing about that, you can use every single asset in the margin list to use as collateral. You don't have to specify which asset to use as collateral. It's automatically taking into account that how many tokens you have, then everything will be used as collateral. So it's very easy to use. We actually, the model is widely used in traditional finance. If you trade US equity or any major equity in any jurisdiction, it's pretty much the same. So it's very easy for traditional traders to adopt to the crypto space. That's one thing. And for futures product, we have finished the implementation of futures trading product, I think about a month ago, and currently in the testing stage. I think it's sometime in a week or two, we will invite a few third-party investors to test our new future trading features. And I think we will do a grand launch very soon. In a month or two, we'll have a beta launch and then followed by a grand launch for our future trading product. So that's pretty much the story, the current status of our derivative product.
So I got it wrong just now. You guys have not launched your futures product, so I'm looking forward.
Not yet. No, yeah. Very soon, but not yet.
To tracking your futures product on CoinGecko and seeing how you go. And I think it's very competitive. Like
definitely
at the market share, looking at the trading volume and open interest, and it's a very competitive landscape at this point in time.
Mm-hmm. Yep.
So you guys have an exchange token like every other agent-based exchanges. Yours is called a BitMax token with the symbol BTMX.
That's right.
What are some of the utility behind the BTMX token?
Well, the best part of the BTMX token is that if you're a token holder, you're eligible to enroll in one of our BitTrader program. That in the BitTrader program, we offer 80% of daily commission to be distributed to our token holders. That's the core advantage for people who want to hold a BTMX token. So we do that because we position ourselves as people's chain. I mean, every single user can trade with us, and every single user, every single token holder is owner of the exchange. So that's why it's more like we collect community feedback, we build on community feedback, and we build it for all the traders, and we want to share our core benefit with everyone. So that's the position we are taking. So I think BTMX token holders are very happy because the year of 2019, despite the market volatility of the market, the token still end up with more than 300% of the return. One of the best performing platform token in 2019. And I believe we have a big year ahead in 2020. The other benefit of BTMX token holders is that you can purchase point card, which can be used to pay off the margin interest of our exchange. And it has a huge discount, 50% discount right now. And other benefit, like you can purchase multiple products we're offering. For example, you can multiple 3 times your airdrop award. For example, if we decide to do an airdrop, you can purchase an airdrop multiple card to get 3 times as more as airdrop, and as regular users. So that's some of the benefit that token holders enjoy with BitMax. Of course, down the road, once we have more product, we have staking, we have derivative tradings, we will build more usage into BTMX tokens. As I said, we always position ourselves as people's change, so we want to share as much as we can with our token holders.
Yeah, very interesting. Actually, I'm actually a big fan of exchange-based token because it's probably one of the token category where you really want to do a DCF model on the token utility. You can actually do that and probably give a target price to any of these exchange tokens. And if you look at the past performance of all these exchange-based tokens, it's generally one of the better performing ones.
Pretty good, yes.
It's subject.
I totally agree. Yeah. I totally agree. So one of the biggest problem in the crypto space is many projects, they don't have any profit model, meaning that they cannot generate revenues from real business, which makes it very difficult to do a proper valuation on their project tokens. But the exchange token is different. It's probably the only business in the crypto space right now who has a real revenues and solves real problem, has a real business, and connect a large user base. So I would say exchange token is definitely one of the most solid type of token and category in the crypto space. I totally agree with you.
Yep. So in 2019, talking about the token utility, we saw last year Binance started launching native blockchain called the Binance chain. And then usually the trend that we see is that once Binance do something, everyone starts rushing in to do the same thing. So we saw Huobi, Get.io, BitMax, BitMax all making an announcement that they also be launching their own native blockchains. I'm actually very curious to see how all these exchanges will be able to bootstrap their own native blockchain. I'm not too sure if all this increased fragmentation is good for the industry and if the ecosystem can even handle and support multiple native exchange blockchains. What are your thoughts about these native blockchains development, and are there any plans for BitMax to launch your own native blockchain as well?
Well, I don't think I'm a big fan of native chain. I think exchange should be focusing on provide a transparent and fair platform for people's trade. That's the core value of the exchange. I don't think exchange should be focused on native chain. To be very honest with you, even those IO parties and also native chain thing, I would say it's a bit beyond the scope of exchange. We did facilitate some of public sales from BitMax side, but I'm not sure if you guys noticed that we never call ourselves doing IEO because it's in a gray area of the legal side from a legal perspective. It's not clearly regulated. So we always facilitate the public sale, meaning that the entity who raise money is the project itself. The entire process is done on the project itself website. We are the only one to provide marketing and technology service to the project. I mean, even though people still think us doing IEO, which I think is a misunderstanding. So personally, I think the value of any exchange native token is decided by the fundamental of the exchange. The more users you get, the more volumes you get, and the more core benefit they share with token holders, the higher the price the exchange token will be. So it's not, I mean, the short-term price can be affected by all different type of practice like airdrop and IEO, other things. But the longer term, the price is determined by the fundamental of the project itself. So I'm a strong believer of that. So, and also aside from that, native token is something I think is a very overcrowded space. We have so many, over several hundred of native chains out there. Do we really need that many? I don't think so. And what is the purpose of native chain serving? It's just to, I think most of them is trying to allow DA build on the chain and also doing fundraising and things like that. I don't think it's the core value or core business of exchange to get involved in that process. I mean, I kind of understand why Binance choose to do that, but I don't think it's the right direction. And I don't think BitMax will have the plan to launch a native chain in very short amount, in near future, in foreseeable near future.
Yeah, and I'm very glad to hear that because I actually agree with you, and I don't see the point like why everyone is like the Asian-based exchanges are rushing to launch their own chain. It doesn't make any sense at all. I see the logic why Binance would want to do it because they are trying to decentralize their team over time, and then eventually, I suppose they'll plan to do a DAO for their site, for their own organization. But for the others, they are so centralized, and I don't see why they should launch a native blockchain. And I have no idea how they will build an ecosystem. How would they get other teams to launch their token on top of their native chain? Like, why would anybody want to launch their own token on top of their own native chain? So I'm actually looking forward to see how these guys launch it this year. And I'm not optimistic of how things will perform. But then again,
I would wrong. Yeah, I totally agree with you. Yeah.
All right, cool. So if you look forward into the exchange in 10 years' time, what do you see the exchange landscape will look like in 10 years' time? Do you think there will be a lot more exchanges than what it is now? As it is, on CoinGecko, we are tracking about 400 spot exchanges and maybe about 25 derivative exchanges. And of course, there are many more that we are not tracking. Do you think there will be some sort of consolidation in the space in the years to come? And it will follow like the internet industry where there is one large player for every niche. For example, if you think about search, there's the leader called Google. In social media, there's Facebook and so on. Or do you think this is kind of like a very niche thing and the ecosystem and the industry can support like thousands of exchanges in the space?
I don't think there will be that many exchanges 10 years down the road. I think there will be much, much less. We have already seen hundreds of exchanges stop operating in the past months. As soon as the bear market comes, many exchanges that doesn't have a strong user base and trading volume cannot stay in profit and has to be closed. And also, running an exchange is not an easy task. You have to consider lots of different factors. including technology, including security, including operations, users, many things. It's a very, I would say, a large and complicated business entity because in the crypto space, exchange is pretty much a combination of everything. It's a combination of broker-dealer, custodian service provider, exchange yourself, and also sometimes maybe it has a trading team, a listing committee, has its marketing department. So it's very it's I would say it's very complicated business. Not everyone can stay in profit in this business. Given the number of projects and given the daily trading volumes, I do believe many exchange, probably 80% of the exchange will either disappear or they will do some kind of M&A and merge into current exchange. 10 years down the road, I have full confidence that in most jurisdictions, the regulators will be very clear about how to regulate the crypto trading. Therefore, the gate will be open to many traditional investors, old-fashioned investors, including maybe my mom and pop who doesn't even know what is crypto. They can still open an account with a local broker dealer and invest some of their money, retirement money, into the space. The crypto will be part of the existing financial system, highly regulated. So that's my vision down several years down the road, not even 10 years, probably 2-3 years down the road. And in the crypto space, on the exchange space, the volume will be huge. The volume will be, I would say, at least 10 times or 100 times as now, because the clear of regulation definitely open a gate for a large amount of money. Those traditional institutions will jump into the space, will invest in space, and crypto will be a standard, what I would say, asset allocation for most people, ranging from 1 to 10% maybe, just as people want to buy real estate or want to buy equities now. So the volume is definitely larger. The traders of crypto were definitely larger. But however, we will see less and less exchange in the space because the regulation is actually two-sided sword. One is it definitely protects the investors and regular industry. Two is it puts a lot of burden on the exchange itself to meet the regulation standard. We see many small exchange whose trading system is kind of shaky, whose operating is not that very well, not meet the standard. It still exists because in the crypto space there are lots of gray areas exist. But I think once we have everything cleared, there will be no space for those exchanges to exist, and it will be pretty much same as currently we see all other industry. We will see 4 to 5 leaders in the space, and together with maybe 10 to 20 second tier players. That is pretty much all major industry in the planet, I would say. For example, automakers, for example, cell phone makers, there will be only 4 to 5 different giant exist in the space, and together with a bunch of smaller players, and that's pretty much it. We don't need a 10,000 exchange. We don't even need a 1,000 exchange. Even 100 is too much, in my opinion. Yeah, so that's my thought.
Very well said, I suppose. So one of the things that we did was we recently published our 2019 year-end report. And in the report, we have a 2020 prediction in which you gave a prediction to us. So let me read out the prediction that you gave to us.
Sure.
In 2019, we saw many of the large exchanges expand coverage beyond trade facilitation in spot markets to encompass a more holistic suite of service and product offerings, including derivatives, custody solutions, lending, and staking. I think we will see this trend continue in 2020 and even intensify as retail and institutional clients consolidate their businesses to a handful of top-tier platforms. I don't necessarily think we will see many of the key industry players stray from the status quo too much with high-risk innovations. Instead, we'll see top-tier platforms pursue various strategies to differentiate within their existing business models and invest significant resources in keeping up the pace with the rapidly evolving regulatory landscape. So that was your prediction for 2020. Do you want to elaborate further on what else do you think will happen in 2020?
Well, I think my message is pretty much self-explained. That's my envision, because compared with 2 years ago, on the top exchange in the space, including BitMax, I think it's already very sophisticated, it's very comprehensive, and we can no longer view them as a grassroots, easy exchange. They are all very comprehensive. A lot of products they offer, a lot of service we can offer. We can compare them with the traditional financial exchange. So in order to capture new market shares, in order to serve a broader audience of users, we have to focus on the details of every single product that we are offering. For example, the margin product we have right now, I would say it makes 90% of people happy. There are details like more order types and better liquidity mechanism. There are things we want to improve in the 2020. So similarly, on other products we offer like staking, derivative trading, we're similar. So we want to focus on the details. We always say devils in the details. And I think going forward, detail is the key differentiator between different exchanges, and we should target different user group and satisfy most of their needs.
Yeah, I think it's very interesting. And I like to give this analogy that I always tell people the exchanges in this day and age, especially the top competitive exchange, they are adding a lot of services and product offerings, and they start to resemble a lot like a bank for the crypto space. But nobody known as a bank because it comes with a lot of regulatory compliance. So, but
exactly,
a lot of things sort of resembles the services and things that a bank would do. So I'm very interested to see what are the things that you guys will be launching this year. And coming to my last question, probably, so you already mentioned some of the things that you guys would do, and what are some of the plans in 2020 that BitMax will plan to do? And if you have not already mentioned, then do let us know what will keep us excited for this year.
Well, as BitMax, we always want to lead the industry instead of following. So like I mentioned, so there are two major trends in the industry. One is every top exchange want to focus on the details and to polish more on their products. And BitMax is the same. We want to provide as better service as we can to our users. That's one thing. So we pretty much focus on a lot of details on the service we already offer, we will be offering. And that's our primary goal in 2020 to improve our user experience. Two is, like I mentioned, I predict lots of consolidation and also partnership between exchange going forward in 2020 and the year beyond. So BitMax is the same. Like as I remember when I set up BitMax early, I said the nature of crypto. There's one pain point that one is the trading volume is not comparable to the traditional financial market, but also very ridiculously, the trading volume are scattered into different exchanges. So even Binance and Coinbase contribute as top exchange, but their trading volume compared with Nasdaq and NYSE is still a fraction of that. So I would say going forward, volume consolidation, exchange cooperation, and maybe order book share is the major trend that we'll see happening in next few years. BitMax is always open to collaboration with top exchange on building better liquidity for all investors. So that's something I want to see, and I'll be focused working on. And we have been contacting a few other exchanges. We're currently actively working on that. See if we can have some consolidation on the order flows and also other product collaboration. So I cannot disclose too much on this, but that's definitely something we want to see, and I'm happy to see.
Yeah, I think what you mentioned just now on order book sharing, I think is very interesting. With CoinGecko Trust Score, what we observed was that we started measuring the 2% depth from the mid price for each exchange trading pairs order book. And especially, for the main coins like Bitcoin, Ethereum, and all, it's usually quite liquid. But liquid is relative to, if you compare liquidity to traditional market, it's not liquid at all. But relative to other coins, that you start seeing that, especially the smaller cap coins, that the liquidity, the depth of this order book is actually really low. So exchanges sharing liquidity, sharing the order book with each other will actually help with the expansion and the growth of the industry. So really looking forward to seeing this trend continue in this future. So lastly, before we close off this podcast, how can people find out more info and follow BitMax?
Well, people can follow us on Twitter. People can join us on our Telegram channel. And there are also announcement channel from us. And also we have a Facebook account. People are welcome to follow us. And also we have YouTubers, and we have different language communities we have community for 10 different languages. And join our Zen desk, and our help desk is available 24/7. So if they don't reach back to you within several minutes of your questions, feel free to talk to me, because I'm also one of the client service team. And all right, I think thanks again for everyone for using BitMax in the past year. I hope you can continue to support BitMax and build a very transparent, efficient, and robust exchange for everyone to use.
Thank you very much for joining us on the CoinGecko podcast. We're very happy to have you on this show, and I hope that all of you on listening to the show learn something interesting about BitMax. And if you have any questions, feel free to ask, and you know where to find the BitMax team. So if you have any feedback,
thanks, Bobby.
Thank you very much, George, for coming on the podcast.
Thanks, Bobby. Thanks, everyone.
All right, that wraps up the show. Thank you very much for listening to the CoinGecko podcast with Bobby. If you like our show and want to know more, check out podcast.coingecko.com or please leave us a review on iTunes. If you have any feedback, do drop us an email at hello@coingecko.com. Join us for more next week. See ya.
This podcast is provided as part of the overall information on cryptocurrency contained on our website, is for your general information only, and does not howsoever constitute any endorsement, financial or investment advice, nor any solicitation or offer of securities or other financial instruments. CoinGecko and the podcast presenter makes no warranties, implied or express, of any kind in relation to this podcast, including, without limitation, the accuracy and updatedness of its content. All opinions and recommendations there in the podcast are based on the personal opinion of the presenter. Please conduct your own research and procure professional advice should you, at your own risk, decide to howsoever invest or trade in relation to the content contained in the podcast.